If you want to start investing in Belgium, this video is the whole plan. Exactly what to buy, where to buy it, and how to set it up once so it runs without you even touching it. You can do these 4 steps and you'll be further along than most people who've been about to start for years. I'm Thomas. I wrote a book on ETF investing in Belgium. It's a practical guide. Let's go through it. First, why does it feel so hard to get started? There's a couple of reasons. When you Google or you run through ChatGPT, how do you start investing? A lot of the material you'll find is kind of US focused, so there'll be stuff on Roth IRAs, 401ks. It's some pretty good advice overall, but it's not tailored to Belgium. And so when you ask your bank, a lot of the time they'll try and kind of sell you an in-house fund, so there'll be an entry fee, there'll be some running costs. And of course, Belgium has its own taxes, its own brokers, its own pension quirks. And so this is really an actionable plan built for you in Belgium. So should you invest at all, or should you just keep saving? Here's kind of an uncomfortable truth, though, about a savings account. It kind of feels safe, but it quietly makes you poorer. This is a tool that we developed called Backtest. It allows you to look back on history and historical performance. And so this is a traditional kind of savings account. Let's say it's a Vanguard Eurozone government bond. And let's say we put in 10,000 euros. In terms of the annual compound growth rate, it's about 2% per year. So you think, okay, that's not too bad, right? But the big difference is that due to inflation, it's simply not enough. And so here we have a graph on Backtest where we show the impact of inflation, and so you can see the difference between the nominal and the real line. And so essentially, even though you think you're making 2%, you're actually losing money because you're losing that purchasing power. So you've got the same kind of money, but you have less bread, a smaller house deposit, and that's the real risk in Belgium. It's not really a stock crash you recover from, but the erosion that you actually don't notice. So investing is simply how you stay ahead. So here's the plan. Let's get into it. Let's go into the 4 steps. So before we actually dive into step 1, there's actually a step 0, I'm going to call it, is that you don't invest money that you actually might need soon. So it's really important to keep 3 to 6 months of living expenses in the savings account. It's called your emergency fund. It's the reason, a surprise dentist bill or a broken boiler never actually forces you to sell investments at the worst moment. And so one resource that we developed was to look at the best savings accounts in Belgium. And so this is a really helpful tool that you can just play around with, see which banks are offering the best one. You can check on the interest. You can check on the fidelity premium. It's really, really simple way of just seeing which accounts have the best one. We constantly update it too, so you can just park your money there for your emergency fund. Of course, if you have any debt, please clear that first, because obviously no investment reliably beats a lot of credit card debt. So make sure you're all set up, and then you can get into finally step 1, where we're going to look at investing. So step 1 is really knowing what you're investing for, because it kind of decides everything else. So 2 questions you have to ask. First, when do you need this money? If the answer is 15 or 20 years, like your retirement, you can ride out any kind of crash that's going to come up. 7+ years, you can hold mostly stocks. Less than that, you really want some more stability mixed in. Secondly, how do you handle losing money? So imagine you invest 10,000 euros today, and a year later it's worth 7,000. Do you panic and sell? Do you grit your teeth and hold? Do you buy more? Let's be honest, because the best portfolio isn't the one with the highest return. It's the one that you can actually stick with when it's down 30%. And that's really the scary part. And so let's go directly into step 2. Step 2 is all about building your portfolio. So there's some good news. You don't need to have a very complicated portfolio. You don't need 14 ETFs. The engine that you primarily need is one global stock ETF. The one most people in Belgium start with is called IWDA. So it's a single fund that holds around 1,500 companies across the US, Europe, and Japan. So we're back onto Backtest, and you can see the historical performance of IWDA. And so we can go all the way back. As you can see, the compound annual growth rate has been about 8.41%. And you can just see all the historical returns since 1969. And so what's great about investing in the MSCI world is that you're not betting on the next Apple or Tesla. You own a slice of every single one of them. And so obviously I'm not telling you to buy just IWDA. I'm just telling you it's a great example of a fund that's just historically worked very well. And so you can add in emerging market funds. You can add in China, India, Brazil for wider coverage. And if big drops would keep you up at night, you could add something called bonds. And bonds barely grow, but they cushion those falls. From there, you can sit anywhere between defensive or stocks, depending on how long you're investing for. One rule to remember if you're investing for the long term is to choose accumulating ETFs. So these are the ones that reinvest the dividends instead of paying them out. Because Belgium taxes paid out dividends at about 30%. So look for the ACC in the name. IWDA already is one, and you can find easily that it's an accumulative ETF. All right, on to step 3. It's where to buy. So you got 3 options. This is where Belgium is really quite different. Quick thing before I get into the options, though, I'm going to put out one of these videos for investors living in Belgium every single week. So please do subscribe. It really helped me, and I hope the next one will find you. So option 1, we built a resource which actually looks at the best brokers in Belgium for ETFs. You obviously get full control, you get the lowest fees. But before you really compare the prices, and we built this whole kind of interactive table similar to how you saw the savings account, we built it for specifically so you can look through all the different options in Belgium. But the 2 questions that matter far more than which one has the cheapest commission on trades is, does the broker handle Belgian taxes for me? Will I have to declare foreign accounts to the national bank every year? And so through the tool, you can kind of check exactly how everything works. You can check the Belgian taxations, you can check the declaration of accounts, you can also check some other stuff in terms of fractional shares, or do they do savings plans, do they offer It's Me? And so it's a really fun way of just looking through all of them. Obviously, we have detailed analysis of each broker, specifically for people living in Belgium. And so it's a great way to just kind of get a big overview of what it is. The ETF that we put for the pricing was actually IWDA, so that's also helpful based on the video, so you can see exactly how much the transaction fees are. We also added in the TOB rate, so that's a transaction tax that you pay every time you buy or sell an ETF. I'm actually going to do another video on that, specifically on taxes. So you can see that, there's a lot of good options in Belgium. MeDirect is one that's currently offering free ETF investing, but I wonder where they're making their money. You got low fees at like kind of these neo brokers like Trade Republic, and obviously the more expensive ones are the Belgian banks like Bolero at €5 or Keytrade at $5.95. The fee difference is quite small between them, but the admin difference is quite big. So you have to really look at the options, look at everything that's written in this guide, and then that will help you make a decision on which one to choose. There is also a second option, which is an automated investment app. So there's quite a few in Belgium now. You can set up a monthly account. It builds and manages a portfolio for you, and it reinvests everything automatically. So you pay a bit more than a pure DIY version, but in exchange, you never have to think about it. There are a few of these built in Belgium, so go compare them on the portfolio cost and also just the ease of use. And so the third option in Belgium is to work with a financial advisor. Unfortunately, most advisors in Belgium are tied to a bank or an insurer, so they're selling their employees' products. But if you go this route, just ask them how they're paid. So essentially, DIY with a broker, you get to enjoy control. If you want it handled, either beats kind of waiting another year. So let's get into step 4. Now we want to turn it into a habit, because consistency beats timing every single time. So let me show you the whole moment where people postpone for years. So essentially what you want to do is search for your fund with your broker. This is, for example, through Bolero, so you can get something called an ISIN code for the ETF. Double check the ISIN code, make sure it's the right one. You can check online, check on justetf.com, or even through Curvo and backtest. And then you can kind of, find the IWDA or whichever ETF you're looking for, and then you'll see this kind of buy and sell screen. So you can obviously choose how much you want to buy of it. This option, for example, with Bolero, does not offer, unfortunately, fractional shares, so you have to buy the entire share. And obviously at this price it was 75, but obviously you can double check when you're actually going through the purchasing. And so some brokers and apps, they let you set up a monthly plan as well, so you can set up automatic standing orders. But double check it. If yours doesn't, just set a reminder in your calendar, place the order, click buy, and there you've actually bought your ETF. So it's very simple to get started. Yeah, so you're probably wondering now, like, what does it mean to invest in, for example, an IWDA every single month? Well, I wanted to show you through a compound interest calculator that we developed. That's actually a good way of, bringing it to life. And so what you can see is that, let's say it's 7% yearly return, and we want to invest about 200. Let's say we grow over 10 years. Then we can see exactly how much we deposited, what our actual interest, and then what our totals are. If we keep this invested with the same plan over 20 years, then you can see how it just compounds and continues to grow. And so it's really a wonder. Let's do it after 30 years for our retirement. And that's it. This is not really a prediction, it's an illustration, but notice what it doesn't require. There's no stock picking, there's no perfect timing, there's no looking at charts, there's time and consistency is just going to do the heavy lifting. So the expensive mistake isn't really starting badly, it's starting late. So one thing, as you notice in this video, there's a lot I haven't covered. It was kind of an introductory, but there's also the Belgian capital gains tax on investments. There's quite a lot of confusion on it, but the short version is that you get a 10,000 euro yearly exemption. So most long-term investors will not pay anything for years, but you need to know how it works, and that's exactly what I'm going to break down in my next video. So I'll see you there. Thank you very much.